Hello traders and welcome to the Friday wrap-up, November 28th, 2014. How's it going, traders? It's a beautiful day, Saturday morning, coming to you live from Pattaya, Thailand, and I gotta tell you, it's absolutely the 29th where I live, being 12 hours ahead of the US Eastern Standard Time. But it's great to be with you on a Saturday morning, and this is the Friday wrap-up where we are going to go over some daily charts. We'll look at some new stuff today that I was watching during the week, so it's going to be a little bit more in-depth today when we start looking at these daily charts. Traders, don't forget this is brought to you through FXCL. FXCL Excellence in Trading, our great friends. Traders, if you would, please give me a minute and let me introduce myself to you. My name is William Gilday. I am your moderator for the Friday wrap-up. And then, of course, Monday through Friday on every trading day, we have the market opening preview that we do every single day, and that is brought up to you before the London Open. Traders, I started trading in the year of 2006 and 2008. I retired from an awesome career in the public safety department out of the great state of Florida. 9 days later, I came on a 3-month holiday to Thailand to celebrate my 27-year career and my retirement at the wonderful age of 48. And, well, traders, it's 2014 and I'm still in Thailand. And I guess I'm still on vacation. But I have to tell you, I think I work harder now than I did when I was working in the fire rescue department. But I'm having a great time. I love trading Forex markets. I'm in it every single day. I'm listening to news. I'm watching charts. I'm looking for new strategies to help my trading strategy, the way I trade, listening to webinars, and I'm always learning, and that's the secret about this Forex trading, or if you're trading pot-bellied pigs or coffee or whatever you're trading, you just have to stay involved and just give yourself that chance. However, I will tell you, after this recording, I won't turn a computer on for 24 hours, so it'll be like Sunday afternoon before I come back to my computer. All right, let's get over to the legal stuff. This is our risk disclaimer. Forex trading has a large potential of rewards, but also a large potential of risk. You must be aware of the risks and be willing to accept them in order to invest in the Forex markets. Traders, most of all, please do not trade with money you cannot afford to lose. Traders, always remember that past performance of any trading system or methodology is not necessarily indicative of future results. Meaning, traders, if you're on a demo account for 2 months or 3 months and you're new to trading and you go over to a live account, your results are going to be different, and expect that. If you had a 60% or a 50% win ratio on a demo, you can expect you're going to go down to a 30 or 40% win ratio when you go to a live account. And that's because psychology comes into play, because now you end up focusing in on money, and really you don't want to do that either. And that's another whole topic for another day. All right, let us talk daily charts. Very, very interesting week. I usually do a commentary, and I really didn't have much to say, and I will go over the numbers for the market opening preview for the next Asia session. However, I thought it was more important that we really got into these daily charts and got a little bit more technical than we usually do. And we have a lot less charts this time around. I think we're looking at like 9 charts instead of our normal 15 or 16. Because we're going to look at these charts a little bit more in depth because of what's going on. And it's affecting our trading. And I'm getting emails and people saying, help, I do great one day and the next day I'm getting wiped out 3 and 4 times. So let's see if we can help you out here. Taking a look at the daily charts. Traders, this is the Euro USD daily. There's nothing wrong with the fact that you get in that slump, or you get into that where you end up with a 3 or 4 trade losing streak. I'll tell you, last week I was looking at a video of a trading room, and he trades the CL, which is oil, and the ES, which is the E-minis in the stock market. And ETFs. And so I was watching this video, and it was quite interesting because what I learned from that was that he had, in his money management system or in his brain, he was only going to lose so much, or he was only going to have so many what he called bullets in that gun to take trades. And he was determined and confident. And this did not come from me. I heard this from another person that's an excellent options trader, and he said, confidence in trading, have confidence in trading, trade with confidence, and that's what, just always remember, if you get that 3 losers in a row, stay with your system and just tweak your system. So today what we're going to do is we're going to go into these daily charts, and we're going to look at why are we getting days where we're getting 30, 40, 45 pips, and then the next day we're losing 60, right, on 2 trades or 3 trades. And this is what we're going to look at today. So take a look at this. I put this in ranges. You can see where the 200 exponential moving average is. Then you see the first yellow line. Well, that is a resistance area. And the next line is now a support area, right? Which would be a support area, but now is a resistance area. Now look at where current price is. So if you look at this chart spatially, if you look at this chart from the top to the bottom, from the left to the right, you can tell the euro dollar is in a downtrend. There is no argument about that. There is no question about it. And my friends, the way I look at it, we're going to be down to 121 before this is all over. They start quantitative easing, this euro dollar is going to dump. It's just happens. It's just the way it is. You print money, the value of your currency goes down. So this is going to change. But what I wanted to show you here was that if you look at this last set of candles, take the last 6 candles, right? So we had 4 blue days, which means we had higher highs and higher lows, and then we ended up with 2 red days, lower lows and lower highs. Now this is a daily chart, so some of these candles have some pips in here, right? But if you place ranges in your charts, you have to love your charts. I don't care what platform you use. You have to love your charts and you have to use them to your advantage. And this is a range here. So if you were trading this on a 15-minute chart or an hourly chart, which is my favorite, by the way, you would have to look at this and you'd have to say, well, on a daily chart, I'm in the middle of a range that's about 275 pips. And I'm in the middle of this range. And, now you have to take in the fact of fundamentals and all of that stuff. So I wanted just to bring that to your attention. So if you went to you could see the support on the bottom. You could see it was touched 3 times and reacted to that price level. Well, now go to the middle yellow line, right? Orange line there. And you could see where price hit that. And then gave you a doji that day. The next day gave you a doji. And the next thing you got is a red candle, right? Which would have been the doji would have been your alert, and your entry would have been that red candle, and you would have taken that down. And what happens? Well, if you looked up to the chart, you knew you were coming up to support. So towards the end of the trading day, you would have to be saying, well, I need to either take my trade off the table and just take my pips, or work out some money management, because look at the next 4 days, what does it do? It comes back up and takes 80% of your profit, right? And then what happens? We ended up with 2 red candles. So this is what I'm talking about. This is really choppy, sloppy price action. This is not what we're used to trading. And that's why so many people are having a hard time trading in this type of environment. The other situation is that we're coming into the holiday season. And the holiday season, we're going to get some really slow days. And we had a holiday last week in the United States for a day, 2 days, and it showed. And the markets reacted to it and absolutely hardly even moved. It was, horrible, right? So those are the days you just have to turn off your computer. Now, I spent a lot of time on this euro dollar. Trust me, I won't spend that much time on all the other charts. I've already burned up almost 10 minutes. But I wanted you to understand the theory behind why I put these ranges in here so you can see how price action is sideways and choppy and nasty. Let's come over to the next one, and this is our good friend, the pound dollar. And look at this pound dollar. Now, this pound dollar has been all over the place. It's been a very difficult pair to trade. You know, it's in a downtrend. There's no doubt about that. It's in a downtrend. But what's happening is it keeps bouncing off of support levels. And you can see at current price right now where the bid line is, at current price, that this has just kept on bouncing all over the place, right? Comes down, bounces, goes up, and then the next day you get a red candle, and it's just bouncing all over the place. And then Thursday, Friday, we end up with 2 red days. Okay, again, we're in a sideways price action, and we're being tested at these support areas, and then of course we at resistance. So what I want to see is I want to see the extreme, right? I want this to come all the way back down to support, or go all the way back up to resistance, and I'll sell the heck out of this. I'd rather sell it than buy it, right? I don't want to fight the river. I'd love to see this thing come all the way back up, but I might take some pips on the way. All right, here's the Aussie dollar. Now look at this chart. This chart, if this was a normal 15-minute chart and you were new into Forex trading, I'd say, well, this was a nice stair-stepping chart. Moves up, it fibs, moves up, and fibs. However, because it's a commodity pair, and we know it's a commodity pair, here we are in these ranges, and it's taken out these ranges. If you look at the top orange bar, the top one, where that trend line starts, look at how many times it had spiked that area, that price. It had spiked it. We have 3 wicks clearly breaking that area and could not close above it. Well, the first wick is clue number 1. The second wick is clue number 2. And the third wick is your entry. That's an entry signal. Okay? That is a signal to say, all right, this is red, we're going short. End of story. You always like to see some candles. Now, this is a daily, so it's a couple of days. You don't want to see 2 wicks back to back, right? Unless they're really double tops or something like that. But you always like to see 4 or 5, 6, 7 candles in between and get another wick where it retests it, and then you want to take it short. And look at what we have here. We have probably 2 weeks here, and then it dumps all the way back down again. Now, what does it do? It goes sideways again, right? What does it do? It comes up to that trend line, comes up to the middle of that range, and then dumps. Where does it dump back down to? To support. And it's now hit it twice. All right? All right, let's take a look at our New Zealand dollar. Here's our New Zealand dollar. This was a very hard pair to trade this week, and I'm a very big fan of trading the New Zealand dollar. Now, we know for a long time that the New Zealand dollar has been bearish, surprisingly, but it is. It has been bearish. And this week, if you would take the last 5 candles and said, I have to trade that, that's a very hard situation to trade. If you took the last 5 candles on this chart, going from the right to the left, and looked at those 5 candles and had to trade that, you'd have a rough time. I mean, you'd have a bad day, more than you'd have a good day. So you have to be really cautious, when you're looking at this. And you just have to realize this, that if you have this on a daily chart, what are you going to have on a 15-minute chart or a 1-hour chart, okay, or a 4-hour chart, which is a great chart to trade. But, I love trading the 1-hour chart. The 15 chart's a little bit sloppy for me. It just confuses me. So I like the 1-hour chart, and I love the 4-hour chart. Absolutely. All right, let's take a look at the Euro Aussie. Again, I'm not going to spend a lot of time on this. This pair has been a disaster to trade. Look we have 3 blue candles. Bullish, bullish, bullish. Traders, I wish I could expand this chart out so you could see more of it. And you'd see that this is in a bear. This pair is bearish. The Euro Aussie is bearish. It keeps fighting that 200 exponential moving average. And if you look on this chart and go back, I bet that's 2 months worth, or if not more, of fighting that 200 exponential moving average. Keeps bouncing off of it. Again, bouncing off these ranges. Put horizontal lines on your charts. Put trend lines on your charts. Use that to your advantage. If you don't use EMAs, I would advise to put a 200 exponential moving average on your charts. It's only going to help you. And you'll see how price is a magnet always to the 200 exponential moving average. Let's take a look at the Aussie Yen. Aussie Yen, again, very, very bullish pair. And you can look at the last week. It absolutely came all the way down to the bottom of the zone. And what does it do? Thursday and Friday, we get blue candles. You know, just wild. Really, it's not Thursday and Friday. That's Wednesday and Friday. Of course, Thursday there was the U.S. markets were closed, so you're getting some volume in there, but not a lot. So, you know, you can see how these go in these ranges and how they, and if you look back in the chart and expand them, you can see how they really do work. And just really look at that stuff. Look at that pin bar on that top one, right where under the Aussie yen yellow line there. Look at that. Look at that doji, right? Wow, is that not a clue? Right, your next candle comes out. It's a tiny little candle. The next candle comes out. Got a nice wick on it, right? Goes red. It's red, right? Boom, you get in that thing and you take that down and away you go. And you made some nice pips in 3 days. That was a nice trade, right? Where does it come to? Support. Look left of the chart. All right. Here we go to the pound yen. Again, another pair that's been bullish. It's been great. However, it's stuck in this range here, and it's really should have put another yellow line there. You can see where support is for like the last 12 days, last 12 3, 6, 7, 8 candles. You know, if you go to the right to the left, you can see where it's at support, right? And it bounces off this level and keeps bouncing and bouncing and bouncing. Again, try going now down to a 15-minute or 1 hour chart and trade that. It's very difficult when we're in this kind of situation. And, you know, again, I'm just trying to stress to you how to look at this when you go back down to your lower time frames. And the last one of the day, my friends, I know this went a little bit longer than usual, but I thought it was very important that you saw this. Here we are with the dollar index. I always end with the dollar index. And folks, the dollar is still strong. I do think it's going to ease up. I think it's going to probably end up going sideways for a while now. As we approach the holiday season, but there's nothing good coming out of the Eurozone. So, you know, the Euro is not helping weaken the dollar, that's for sure. So the dollar is going to remain strong. Last week, China had some bad data, right? And Japan had some bad data come out, CPI, all that stuff. You know, bad data keeps coming out. GDP, bad data, slow down. We're seeing all the slowdown in these countries. So, you know, we're looking at Japan to be doing an intervention here shortly. So there's a lot going on, and this is going to affect us. So we need to look at the dollar index chart. Just so you know, if you do not have a dollar index chart on your platform, please go to the dollar yen. The dollar yen mimics the dollar index almost exactly, so you have no problems. Traders, on behalf of myself, William Gilday, and our great friends, FXCL Excellence in Trading, I really appreciate you taking your time to watch this video that is going on to almost 19 minutes, which is, I think, the longest one I've ever done. But thanks so much for watching, and I hope you got something out of it. It's really important, and I hope it helps you trading going into the week ahead. Traders, enjoy your weekend, and coming to you live from Pattaya, Thailand. Have a great break, and we'll see you next time. Take care now. Bye-bye.